One major, we call them wirehouses, like Morgan Stanley, UBS, Wells Fargo, Bank of America, Merrill Lynch. Not one has put Bitcoin on its platform yet, a Bitcoin ETF. They're all doing their due diligence. And I think what's going to happen is within the next few months, one will, and it may be not the big ones, it may be an independent RIA like LPL. They tend to move a little more quickly. Once you get one with a spot Bitcoin ETF on its platform, the others will fall in line pretty.
Cathie Wood is the founder, CEO, and CIO of the Florida-based investment management firm ARK Invest, which manages several actively managed exchange-traded funds focused on disruptive technologies such as blockchain, robotics, artificial intelligence, energy storage, and gene editing. Earlier this year, the U.S. Securities and Exchange Commission approved ARK Invest's ARKB Spot Bitcoin ETF in collaboration with 21 shares. The approval of U.S. spot Bitcoin ETFs has been a significant industry event, breaking and setting records for exchange-traded funds globally. Recent reports indicate that these ETFs recorded 3 consecutive days of inflows on a Tuesday after a period of substantial outflows, reaching $15.27 billion in total net inflows. BlackRock's IBIT captured $11.3 million on that Tuesday, now holding 312,565 Bitcoin valued at $8.26 billion at current prices. In a recent discussion with Peter Diamandis, Cathie Wood shared her outlook on the ETFs, countering the growing pessimism about their recent performance and the ongoing crypto bull market. She believes that we are about halfway through the 2024 to 2025 cryptocurrency bull market and could be only weeks away from significant events that would drive Bitcoin and other cryptocurrencies to unprecedented highs. One such event is the potential listing of Bitcoin ETFs by major national wirehouses like Morgan Stanley and UBS, which she firmly believes will happen before the end of 2024, instantly impacting Bitcoin's price. Cathie's timeline aligns with estimates from analysts at Bernstein Research, who, in a June research note, predicted that major wirehouses and large private bank platforms are on the verge of approving the listing of spot Bitcoin ETFs on their platforms. During her interview with Diamandis, Cathie also discussed her $1 million price prediction for Bitcoin and the next phase for the ETFs. Bernstein analysts expect the listing of these ETFs to occur sometime between Q3 and Q4 of this year, leading to renewed interest in the ETFs and significant price increases for Bitcoin and other cryptocurrencies. This optimism is driven by the anticipated listing approval, which is expected to have an instantaneous impact on Bitcoin's price, reflecting the broader market's confidence in the long-term potential of cryptocurrencies.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
I have 4 people at ARK who are working on crypto generally, one dedicated to Bitcoin on-chain analytics. And judging by those, we believe, halfway through this bull market. And halfway doesn't mean we're halfway through the price increase because, at the end of a bull market, prices tend to go parabolic. So we have no idea where that, but we feel very strongly just based on-chain analytics, looking at them versus the short 10-year history, a little bit more than that history, that we're halfway through the bull market. What's very interesting, since the ETFs were launched in January, many people think, all right, the boom, and we've had a very nice showing, David versus Goliath. We're in the fight, and very
Congratulations.
happy where we are. Yeah. But not one major, what we call them wirehouses, like Morgan Stanley, UBS, Wells Fargo, Bank of America, Merrill Lynch, not one has put Bitcoin on its platform yet.
Cathie, when you were on stage with me at Abundance 360 last, you were saying you saw $1 million per coin price. Are you still there?
Yes.
By 2030?
Yes, 2030. So our bull case, bull is over 1.5 million. Our base is in the $650,000 range, so about tenfold from here by 2030. And there are three big building blocks. Institutional is one, and I would put it sounds like retail distribution, but these are institutional decision makers at B of A, Merrill Lynch, and so forth. The second is this is a replacement for gold. So we assume that it's going to subsume 50% of the gold, what would be the gold market, especially as younger people are looking to diversify. And then it is an insurance policy. In emerging markets, I just visited El Salvador and had the pleasure of meeting the top officials there, and they are blazing a trail, making it legal tender, and giving their populations or showing the way for other countries to give their.
What a brilliant move!
Yes, it is a brilliant. There are two.
What a brilliant move!
President Bukele is going after two big ideas, and we're talking about them: AI and Bitcoin. And my mentor and friend, Art Laffer, who joined me on this trip, I think is going to be working with that government. It's only a $30 billion economy. Can you believe that?
Wow.
And here
that's
we're
crazy.
talking, and they're being very progressive. They're putting in tax policies that are going to encourage innovation. So I think that's a very big idea.
Yeah.
Argentina is moving in this direction. We've talked to the economics ministers there. They're not ready to go the Bitcoin route in the way that President Bukele is, but they're moving in that direction. They're thinking about it. And then the other insurance policy is for anyone, and in high net worth individuals, but anyone, as a protection against confiscation of wealth, whether that's inflation or outright confiscation because of corruption.
Despite their popularity with investors and record-breaking success, advisors and wealth managers are still not fully embracing cryptocurrency-based ETFs. According to recent reports from Chirilli Associates, only 2.6% of advisors recommend cryptocurrency to their clients, while another 12.1% will use or discuss it at the client's discretion. BlackRock's chief investment officer of ETF and index investments, Samara Cohen, also revealed that roughly 80% of the inflows into spot Bitcoin ETFs have come from self-directed investors using online brokerages. Experts believe this will change later this year when wirehouses complete their due diligence and begin listing the products. In a recent interview, Bloomberg Intelligence ETF analyst James Seifert noted that many of the largest wealth platforms, wirehouses, and advisor networks haven't fully approved Bitcoin ETFs. Currently, advisors or brokers can only buy a Bitcoin ETF for their clients if the client specifically requests it. James added that he expects the situation to change significantly by the end of the year, allowing more advisors to offer spot Bitcoin ETFs to their clients. Cathie Wood agrees with this assessment, stressing that the first announcements are expected between now and October, approximately 6 to 9 months after the products started trading in January. She believes these developments will greatly expand access to cryptocurrency investments through traditional advisory channels.
We tend not to do 1 year, but if we're in the middle of the bull market, I think the next spur is going to be the platforms putting the spot Bitcoin ETF on it. So, and I do think that will happen this year. We were told by some of our prospective clients, the platforms themselves, that they would need 6 to 9 months to evaluate it. So here we are, entering the 6th month. So I would expect in the fall, one or more will put the spot Bitcoin ETF, or many of them, on their platforms. And I think that will be the next swoosh then. I think it was the last halving. Many people, we went through the halving and everybody waited for a pop. And it didn't happen. Well, first of all, it didn't happen because there's a lot of anticipatory buying into it. But I've watched it kind of, gestate, shall we say, and then all of a sudden. So those two could coincide in the 4th quarter of this year. It could be pretty exciting. And someone like Art Laffer, who he couldn't be more excited about Bitcoin because for him, he really believes that, the Fed Many people feel that they have managed monetary policy over the years, so we've prevented terrible things from happening. If you look what happened before the Fed came about in 1913, what happened then is prices were stable. We're on the gold standard. And the economy was very volatile, and you ran into booms and busts, but they were very quick. They were over in weeks. We lead up for years to a crash. In 0809, poster child for that. And here we are again. We had zero interest rates. And, I wonder what the fallout from private equity, private credit, putting enormous sums into real estate and then leveraging it up. We're starting to see the fallout, even in the areas where there's been large in-migration. So the Sun Belt, we're beginning to see multifamily in excess. So, we'll continue to see, crises, I think. Hopefully nothing like 0809. I don't think so, but still, 0% for a very long period of time leads to reaching for yield, which leads to bad behavior.
Cathie Wood anticipates more tumultuous periods ahead for the U.S. economy in 2024, predicting surprisingly large Federal Reserve rate cuts later this year. Speaking at a forum in Hong Kong last month, she stated, "We think we're going to see surprisingly large rate cuts this year. We think the rolling recession that has been sweeping through the U.S. and is hidden underneath headline statistics is going to drive rates down." In the latest edition of her monthly In the Know broadcast, Cathie shared crucial economic indicators and market signals that she believes point to turbulent times ahead for the U.S. economy and markets. One indicator Cathie highlighted is the growing number of bankruptcies and retail closures. Thousands of brick-and-mortar retail and dining establishments have shut down across the United States in recent months due to factors such as inflation, stagnant wages, and higher borrowing costs. She also discussed the crisis in the commercial real estate industry, warning that its progression could negatively impact the U.S. banking industry. Cathie believes the only way forward is for the Federal Reserve to significantly lower rates and resume quantitative easing. She sees this as essential for stabilizing the economy amidst these challenges. Please share your thoughts on Cathie's interview and her predictions for Bitcoin, spot Bitcoin ETFs, and the overall U.S. economy in 2024 and beyond. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.